Hi everyone, and welcome to today's webinar. I'm very excited to be joined today by our partners from Ethos Chapman, and we're going to be talking about the evolving recruitment landscape for wealth management and technology in Asia Pacific. I'm delighted to be joined by Richard, Chris, and Claire, who will introduce themselves shortly. But effectively, Ethos Chapman are a partner that we've been working with for many years, who specialise globally in banking and technology recruitment, and they can give us a really deep perspective on the evolving landscape within wealth management and tech. And as an area, these are two of the kind of core growth drivers within the banking recruitment landscape over the last decade, and certainly some of the most consistent growth areas. And we have seen some evolution of that landscape over the past 12 to 24 months, and it's going to be really great to start to get their perspectives today. So if we go around the room, if we start with Richard, if you could introduce yourself.
Sure, and thanks, Peter, for having us today. So I'm the CEO and MD for Ethos Chapman in Asia, and responsible for our 6 offices here. I know I may not look it, but I have close to 20 years of experience myself, first few years of which was in London and working the banking and financial services markets there as a headhunter, and now 15 years almost in Singapore. My particular sweet spot and background has always been in financial services and the various subsectors therein, insurance, buy and sell side, and so on and so forth. And I believe now, clocking it all up, maybe into the thousands of placements over the years within those sectors. A little bit about EBC as well, if I can be so bold. We're a global boutique headhunter, just to kind of position us in your ecosystem. Global boutique headhunter with 10 offices worldwide. Our core industry focus, and one of the reasons we're so excited to be here today, is within financial services, as Peter shared, corporate functions, governance, and technology. So very, very pleased to be here today, and looking forward to sharing some further insights.
Great, thanks, Richard. And then Chris, if you could introduce yourself.
Thank you, Peter, and thank you, Richard, for the introduction. So my name's Chris. I am currently a market specialist covering the private wealth or private banking and wealth management business across Asia within EBC. Currently, I am leading the private banking and wealth management team, and slightly lesser experience than Richard, but 8 years now covering, recruitment as a consultant. And yeah, hopefully one day I will have over a decade of experience, just as Richard has. So thank you very much. Yeah.
Chris, 8 years can definitely count yourself as an expert. So yeah, great to have you. Thanks. And Claire.
Hey Peter, so I'm Claire from Ethos Chapman. I specialize in tech sales, tech architects within both banking and technology companies. So for myself, I've over 6 years of recruitment experience working with clients across startups to your multinational corporates.
Awesome, thanks Claire. So if we start the discussion kind of more broadly in terms of the financial services market in Asia Pacific, Richard, kind of can you describe the state of the market that you're seeing today and what factors are driving it?
Absolutely, and like I was saying, it's definitely a fascinating market to be in, and a big change from 2021 and most of 2022, when very much the employee-led market. We are very much now in the employer-led market, and really fascinating to see how this plays out this year. I think to zoom in to the financial services job market here in Asia. Look, it's going to be, as I say, fascinating to want to see what plays out. We're definitely in a type of market now that I think there will change over these next few months. it really is as I said, the employer led right now. Employers with that, I suppose, the ball in their court and holding much of the power, a little bit more cautious, strategic about growth, knowing they have a little bit more time to pick and choose new hires, and also benefiting a lot from boomerang hires and a lot of employees returning and looking to return to familiar ground as well. So some interesting dynamics at play for many employers. I think generally speaking, people are believing that, or the common consensus, should I say, that 2024, thank goodness, is going to be more promising prospects this year than in 2023. And look, whilst we're seeing a lot of clients shop around at the moment, I do think over the next few months, as hopefully some growth, investor confidence, general more confidence in the market, as this becomes a bit more predictable and we move into the new year, we might see the tables turn somewhat. Hiring become a little bit more active, a little bit more proactive. Some of the power returning to the employee. But yeah, a very sort of interesting market overall. And I think, again, zooming into this time, a number of factors at play, whether bonuses right now, I mean, we're 6, 8 weeks away from, predominantly most of the people in the financial services sector are going to be looking at bonuses. And we haven't seen an end to the layoffs, and some major banks just these last few weeks announcing layoffs there. Investor confidence, a lot of sort of image conscious employers out there, and how they kind of negotiate and sort of recover from bad press and foul play. And I think a lot of factors in play. I think a really interesting market, and it's going to be great to see how, well, very interesting, I suppose, and exciting to see how it evolves over the year.
And how have you seen kind of volumes of vacancies change compared to this time last year?
It's a fascinating question, and it's something that, in some ways has been bamboozling us in the industry. It's difficult to really point at why, but I can share some sort of observations and perceptions. I mean, the hard facts don't lie. Funny enough, we're actually registering more jobs this kind of 7-8 weeks already into the new year than at the same period last year. So year on year, we're registering more vacancies. So it shows that employers are out there, they are looking. I do expect some of that to be a little bit shopping around, as I sort of mentioned earlier. But job vacancy volumes are reasonably strong right now. Now, this is a continuing trend. The second half of 2023 also saw quite a strong finish. If I isolate EBC itself, I think we had our record of jobs registered back around sort of July, August time. So the vacancies are definitely there. And I think this is one of the evolutions that's going to change, Peter, that I was referring to earlier. A bit of shopping around at the moment, lots of vacancies, but elongated processes. The diversity of roles is there, seniority, job functions wise, and so on and so forth. I think as the year goes on, there's going to be a bit less shopping around and a bit more sort of intentional and decisive hiring. As I do think, the bonus season, which is going to be likely flat, that's going to have a major impact on people looking out. And I do think we're going to see a few more musical chairs, and these vacancies translate into more sort of physical and sort of finished placements, over the next few months.
Really interesting to hear you say, that growth in job number versus 12 months ago. What trends are you seeing? Are there any particular sectors or parts of the market that you've seen kind of driving that, and how are you guys reacting to those?
Predictability is one thing that I really hope comes back to one of this market. I think if you ask any sort of headhunters or recruiters out there, we don't want it to return to that sort of 2021 and 2022 bonanza. Predictability and normality, I think, is one of the things that most people are kind of praying for right now. And you know, within predictability, of course, we try and find patterns, and within patterns, we try and set up to support and kind of engage with those patterns, whether there's hotspots of hiring and things. And it's been really difficult, I think, these last 12 months to sort of pick out patterns and see formulas and see sort of consistencies. But of course, there's been hotspots. You know, job function wise, cybersecurity, cloud, risk, wealth and kind of revenue generators within wealth, banks, family offices, and so on and so forth. There's also those, you know, not just flavor of the month, but flavor of the year, acronyms and sort of, you know, specialized and niche skill sets, which become very popular in recent times and are set to continue as well. You know, the environmental sustainability and government, so ESG, sustainability in general, corporate social responsibility. These are all going to be skill sets that have been reasonably hot for companies to get their hands on these last 12 months, and no doubt it's going to continue these next 12 months there as well.
Great, thanks, Richard. Chris, yeah, as the changes have started to happen in kind of private banking and wealth management, you know, how's your team specifically started to adapt?
Thanks, Peter. I think with regards to our strategies within the private wealth space, as the saying goes, right, knowledge is power. I think more so now than ever. I think as recruitment consultants, to take a very consultative approach when we meet with candidates, when we speak with clients, to give them a little bit more of an in-depth understanding of, you know, the marketplace, the space that we are in, be it, you know, salary benchmarking, be it who are the movers and shakers of the space, and even, you know, market mapping, for example. I think that is something that is quite crucial for us as consultants to also at the same time educate clients and candidates, right? I think that is one important strategy that we try to embrace a little bit more as recruitment consultants. I think second point I would say would be relationship building, right? I think, you know, being in the recruitment industry tends to be pretty fast paced, right? I think a lot of us tend to kind of move at such a pace that we forget sometimes that relationship is ultimately what the basis of recruitment, right? I think sometimes we need to slow down a little bit, you know, take the time out to really build relationships with our clients, even with our candidates, just to understand, to really hear their needs, their pain points, and then be able to really apply, you know, our expertise, right? And hopefully, ultimately, to help both the clienteles, the candidates to, what I would like to say, find a new home, basically, for candidates. Yeah. So I think, I know ultimately, in terms of strategies, nothing new, but really just driving in some key strategies that sometimes might get forgotten in this fast-paced industry. Knowledge, consultative approach, and of course, ultimately relationship building. So yeah.
Great, thanks, Chris. And then Claire, moving on to you and the technology market. I mean, how have you seen relationships change and your approach over the last 12 months?
So actually what Chris has shared is pretty similar. Whatever we do for our clients, strong client relationship, candidate service, market mapping, these are all the things that we've done pretty consistently. But I would say in the last 12 months, we are doing a lot more, especially within the market mapping side, sharing market trends, helping them out, especially for more challenging roles. I think that's where we really add value for them. And I think just to give a bit of insights for the tech market, for both banking and commercial sector, there's definitely a dip. So because of that, the job in the market is definitely more limited. So when jobs come to us, usually these are the positions that are extremely challenging for our clients. And we help them to really comb through the market and headhunt candidates for them. And so I think these are some areas that we really add value for them generally.
Great, thanks, Claire. And then I guess a question for all three of you. I mean, are you still hiring into your teams? And if so, kind of, what types of recruiters are you looking for and why?
Shall I jump in on that one first?
Yeah, sure.
Guys, perhaps. Yeah, well, thanks for asking that as well, Peter. It's a look. I think I'd be amiss to break rank and say that we are hiring thousands of people in comparison with anybody else. We are hiring, and I think, like just as I've been explaining there with the wider financial services clients that we engage with, we're hiring, and we want to do it strategically, and we'll be doing it cautiously, of course, as well. I think with any kind of growth strategy this year, of course, people want to take advantage of adjacent markets, potential other service lines. We're definitely going to be doubling down on our core, and a bit more strategically and a bit more consistently, and then sort of cautiously and a tiny bit more optimistically if we see strong hires in adjacent or sort of new service lines, go for those guys as well. So a little bit more about what I mean by that. Our core is financial services, technology, governance, as well as increasing representation areas like life sciences and consumer as well. So we'll definitely be looking to power those core functions and what we're known to for our clients, and where we're adding most value with our clients and candidates as well. In terms of adjacent and new peripheral sort of new service lines, now contracting is nothing new to us, but we'll be looking to build that out as a service for our clients. I don't think there's any doubt in my mind, during these sort of frugal and very cautious times, a lot of employers will be looking for slightly lower risk hiring strategies to still plug gaps, and interim and contract solutions that be good for that. So we'll be looking to power that power that division across Asia. Also looking to expand upon our small offices. So Singapore's our headquarters, and we have the majority of our Asia consulting base here. But as an Asia-focused boutique and someone that likes to offer value to clients as seamlessly as we can across countries in Asia, and have that as a holistic proposition, absolutely looking to expand upon and strengthen our offerings in Japan, the Philippines, Hong Kong, and mainland China there as well.
Great. Thanks, Richard. So Claire, what types of recruiters are you really looking for?
So for the tech team, now we are more focused on recruiters with deeper client relationships, although that has honestly been an important aspect for recruiters, right? But because of the more competitive market, there's definitely an increased emphasis of such skill sets and relationships. So I think this will be the main area that we will be focusing on this year.
Great, thanks, Claire. And what about for your team, Chris? What's important to you when you're hiring?
Thanks, Pete. I think for our space, obviously top performers, right? But I think in today's context, top performance is not just about your billings, for example, right? I think what we're ultimately looking for are high achievers, in the sense that we want consultants to constantly think outside the box, to be very entrepreneurial, if you can put it that way. For instance, when the market is down, how do we bounce back up? Consultants who are willing to do marketing events, for example, to be able to go out there to come up with networking events for Ethos Beef Chapman, for EBC, so that we constantly stay in touch and active in the market in that sense. So yeah, I think top achievers, top performers in a variety of sense beyond just billings. I think that is ultimately what we are looking to hire, if I can put it that way. Yeah.
Great, thanks, Chris. Right, I want to move us on to the juicy topic of compensation. It's always something that generates the most interest as a theme across both sides of our marketplace. So are hiring companies, recruiters, and candidates. So, just kind of if I could move to Chris and then Claire, are we still seeing candidates in the wealth management space, Chris, kind of demanding 25% plus to move, or has there been a shift?
Thank you, Peter. I think first off, we do have to acknowledge that we are in a candidate surplus market today.
Yeah.
Given what's happened across the wealth management business, we've seen mergers happen, we've seen restructuring happen across international banks the past year, and even today, right now, right? I think what we're seeing is that we do have a lot of candidates out there who might be open to new opportunities. And with a candidate surplus market, unfortunately, what tends to happen is that clients get that leverage of, or hiring managers get the leverage of, picking out the best candidates at a better price point, if I can put it that way. So these days, my advice usually would be to manage expectations a little bit when it comes to salary discussions or negotiations. That being said, a lot of candidates at the same time, I think, post-COVID, we tend to also value the non-monetary benefits as well, right? I think a lot of candidates these days are looking not just at compensation or monetary upsides, right? I think things like work from home, for example, a more balanced lifestyle, even, for example, I'd say stability or longevity within their career. I think these are things that a lot of candidates will consider beyond just that 25 to 30% increment in salary. But that being said, the top performers will still lead to bidding wars amongst hiring companies, firms, and banks. If we have top performers, candidates who are bringing in top P&L, I think we still see firms and banks trying their best to break that ceiling to get in the best people, which is natural. I think that's the overall sentiments right now.
I'm sure. And Claire, what about what you're seeing within the technology space around salary negotiations?
Yeah, so it's actually, again, very similar to Chris. I think these are usually applicable across all industry when it comes to candidate surplus and then when it comes to salary increment, right? So as you mentioned, 25% nowadays is pretty unrealistic. The average kind of increment that we are getting or hearing in the market is between 10 to 15%.
Okay.
And on the flip side, like what Chris mentioned as well, we are seeing candidates that are prioritizing more of the overall package rather than just the salary itself, right? And personally, we've spoken to candidates who actually turn down opportunities or even not keen to interview if the role requires you to be 100% to be back to office. So that actually shows how important is it even to candidates nowadays. And there are some areas that has been increasingly important, which is actually training and development. A lot of candidates will be asking me, like, Claire, what are the kind of training that the company provides? Are they giving us credits for us to do some upskilling of our skill sets? So I think candidates also want to see that the company is actually investing in them and their growth in the organization.
So Claire, actually, are you still seeing, if there's a really hot candidate, are you still seeing clients are kind of prepared to show that flexibility that obviously was really prevalent in kind of 21 and 22? Are you still seeing that for the right candidate?
Not as much, to be honest. Yeah. Maybe exceptions, like one or two, but maybe for generally, I would say no. They are not willing to pay. Again, because the market, I would say generally our clients are very conservative, right? So conservative means that they are willing to wait it out, right? They are not eager to expand unless it's a mission critical job that they need it to be filled ASAP. But most of them, they're like, let's just wait out through the year. If not, someone else can develop up the role. So I think that's why.
So yeah, thanks for sharing, Claire. And I suppose just to add something from my side as well, I think what Claire shared there, very perceptively, is the here and now. It really is that employer's market that we've been referring to. Again, I think a lot of us as headhunters are hoping that's going to change. And in my perspective, perhaps a bit more generally across financial services, I do think some of the power will return to the employee. And whilst a negotiation standpoint is a little bit weaker at the moment, it might be that changes as we get deep into the year. Is that something perhaps you expect as well, Claire, through your goggles?
I think, good question. So I think for us in the tech space, my clients are still saying that they are a little bit conservative for the year. And I think one thing that really attribute to that was the overhire in 2021 and 2022. So because of that, a lot of candidates had a really big increment during that period of time. So I think now we are kind of trying to reach a balance where candidate salary are not too expensive for companies to afford to hire them in Singapore. So I would say the increment will never be as like before 25%, 30%, because they are already starting off at a much higher level. So we have to consider that as well. So generally, I would still think that maybe 10, 15. Sometimes, of course, when there's really good candidates, there's always exception for 20% or more. But let's just talk about generally, I think 10 to 15 would still be around the range for the rest of the year.
Cool. I think this is the very interesting and fascinating market we've been referring to as well, Peter, early on. It's going to be very exciting to see how this kind of changes and evolves throughout the year. As inevitably, if hiring increases, so does that scarcity of talent, or the how tough it is to secure that talent. And again, that's when salary negotiations may pivot a little bit. But let's see. I'm going to resist the temptation to say I have the crystal ball right now.
If you do, can I have a look? One other kind of good indicator is counter offers. Are we seeing much of that, Chris, in the market today? Are we seeing much in the way of counter offers?
I think counter offers will be ever present in especially our industry, in the wealth management industry, right? I think it's something that's here to stay. Hiring managers will always try their best or try everything they can to keep the best talents, right? But I think what's the biggest change that we've seen is that candidates these days are a little bit more firm. They're a little bit more self-aware of what they want. I think they're very cognizant of the fact that, look, if I've decided to make a move, be it for career reasons, for family lifestyle balance, I think what we're seeing is not so much about counter offers not being given out, but rather candidates putting a foothold to say, look, if I've decided to move, I will hold that to commitment, right? I hope that answers the question.
Yeah, thanks, Chris. And then the last one on compensation, Richard, how are you seeing the markets reacting to bonus payouts? I think we ran our bonus expectation survey, the back end of last year. We felt candidates were a little optimistic. Be keen to get your perspective on how they're reacting to the reality of what you've seen so far.
Look, it's the nature of the beast, isn't it? Bonuses are always such a big deal in the financial services space. It's just so embedded in the culture and the makeup of the sector and of the industry. And look, and it's funny, especially as these last couple of years, you would have felt that perhaps people, now seeing the sort of bad prevailing macro conditions be poor for sort of 18 months, that you'd expect candidates to be and employees to be a little bit more accepting now that bonuses might not be so great, and that's unfortunately I think where it's headed. Most of the research we've done and most of the sound bites that we're hearing is that bonuses are going to be, are likely to be flat year on year, and in some cases a little bit lower. Now we'll see how this plays out. Bonus season just around the corner in sort of 6 to 8 weeks or so. Even just now, even though we haven't sort of passed that bonus season and we get to see the facts and the figures come out, we are seeing some interesting moves with regard to bonuses. So, of course, a number of banks, how they've played the, slightly improving performance, especially in the latter half of last year, or how they are kind of shoring up moves to pay their own top bankers large bonuses whilst laying people off. Some interesting and some tight dynamics to play around with regards to bonuses there. And here in Singapore, just reading that this last week that local banks are taking it on the chin, knowing that whilst in some cases profits have been down, in many cases profits have been solid or even an improvement on last year, and sort of paying it forward. We came out today, UOB, for example, are looking to pay an additional month's bonus to a number of their more junior or sort of lower earning staff to help combat inflation, which will, by the sounds of it, be kind of tied up into their bonus pool at the end of the financial year in a few weeks' time. So some interesting dynamics at play for sure. I'll be very interested to see how things do play out in the next 6 to 8 weeks. But I think our advice to candidates is not to, in the majority of cases, not to hold too many breaths. But again, therein, I think this is going to be one of the factors and one of the big drivers of some musical chairs and then kind of an improving job activity and people moving around later on this year and post bonus season.
Great, thanks, Richard. And then, so I know you don't have a crystal ball, unfortunately, but it would have made this session much better. But I'm gonna press you for any predictions. I know you've spoken a little bit to your views on maybe the market improving in 2024, but any other kind of is there anything you can speak to that you think we might see in 2024 and how?
Yeah, absolutely. And look, predictions are always a little bit more fun, in my opinion, anyway. When you're predicting at least a slight upturn in the market, and that's where I would start. Again, I'd hope that no one takes this as absolute gospel truth, but I'm confident to say that the general consensus is that we will see a better year hiring wise and kind of employment wise and sort of all of the activity under that kind of gamut and that sort of umbrella this year. So that's a positive insight and take from that what you will. But I do think that 2024 is going to be even mild, but an improvement on 2023. I think more particularly, there's a number of things that we're starting to hear. I think at this time of year, it's not just bonus season, but budgets are made, target operating models are rolled out, and a lot of businesses in the financial services sector are really starting to look ahead and make plans. And it's been again very fascinating to hear from our clients and sort of rumours in the market about what's going to be happening. Look, I think hybrid work arrangements are going to make another appearance. Are they coming? Are they going? In the banking world, some major players, top investment banks, made some very bold moves to kind of drag, and I use that word very particularly, drag people back into the office and almost play kind of event planner, trying to encourage and kind of inspire people to come in, and that's then sort of being sort of eased a little bit in some cases. And so I don't think hybrid work arrangements is going to go away. I think that's going to make a return this year, especially if, as has been the subject of a lot of this conversation, if the power returns to the employee. If the power's with the employer, what reason do they have to buckle on anything that suits them? But if that does pivot a little bit more towards the employee, I believe that hybrid work arrangements, working from home, working remotely, work-life balance, I think that could, be a big sort of underpinning this year. Automation and AI, don't for a second believe that that's not going to affect you, or whether tomorrow, 1 week, 1 month, 1 year, 10 years, it's going to be a significant part of everybody's world. And I've been seeing, a number of varying stats, 90% this, 80% that, but I think they're all pointing in the direction that pretty much all employers, bar a few kind of SMEs that just can't automate, perhaps. Most employers look at automation and AI therein. How is that going to create efficiencies? How can that lower costs? And again, a little bit about how I was showing earlier, what parts of the life cycle, very intentionally and much more specifically now, what part of our product or our service life cycle is AI and automation going to completely run, or complement, or supplement? And again, there's sort of very key differences between that. So I think AI, no crystal ball needed on my side for that one. That's an obvious one for most. And last but not least, if I can squeeze in one more, I think that these acronyms, these flavors of the month, these things and these skills, which in my mind are still quite heavily camouflaged. So a lot of companies wading through the noise and trying to figure out what it means for them, and how they personify that in their employee base and how they really roll that up and get with it. And these acronyms: DEI, diversity, equity, inclusion, environmental sustainability and governance, ESG, and of course corporate social responsibility. I think Chris made the point earlier that the new currency for a lot of people, especially Gen Zers who are now, a lot of them approaching their late 20s and early 30s, these things aren't just niceties. These things aren't just padding. These are must-haves for companies, for them to want to join, irrespective of more money and things like this. A company having strong sustainability outlooks, proven and publicized CSR and corporate social responsibility initiatives. If these things are missing, these companies are starting to wave goodbye to a large population of the candidate pool. So I think that's going to be another big thing which we're going to see in 2024 as well, how these skills play out, how they are acquired in companies, how skills are learned if they're missing, and so on and so forth.
Great, thanks, Richard. I guess to summarise today's session, we're really talking about, we've seen a very much a kind of client or employer-driven market through 2023, and that continues today, which is impacting the kind of the candidate's ability to negotiate those kinds of pay rises or transfer fees that they were able to get in 21 and 22. For sure, it feels like there is still a little bit more power for really key candidates within private banking and wealth management that maybe we're not seeing at the moment in technology. Overall, that we do expect, or we hope for some green shoots. Certainly, it feels like there is more activity in the market now than there was 12 months ago. Certainly for Ethos Beath Chapman. And we're hopeful that drives through into a more positive employment market over 2024. And then just to finalise, the underpinning kind of value proposition that employers have beyond just salary, we think is going to become more and more important as Gen Z becomes a more prevalent part and a much bigger part of the employment market. So I'd love to say, Claire, Chris, and Richard, thank you so much for sharing all that insight with us today. I'm sure our viewers have got a ton that they will take away. So just wanted to finally thank you all again for your insight into today's session.
Thank you so much.
Pleasure, Peter. Thank you so much.
Thanks, guys.